Should the Reserve Bank have gone 0.5% yesterday? Will the Fed cause an interest rate surprise with its comments tonight? And have we been right about the Goodman Group? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, I was put on the spot yesterday, asked whether it should be 0.25% or 0.5%. And an old softy like me said 0.5%. I said 0.5%, got it wrong. But I thought the Reserve Bank would do that to try and do a big scare and stop people from spending. But Dr. Phil went to 0.25%. What do you reckon?
I'm surprised you said 0.5%, Peter. I always thought he was going to go 0.25%, but I think he should have gone 0.5%. And
it was the other way around. I wanted a quarter, but I thought he would.
And the reason he was going to go 0.25% was because he went a quarter last time, and it's too early to concede he probably made a mistake, right?
No, that's a good point.
Right, and the Reserve Bank are behind the 8 ball in this whole game, right? And look, there's some, to be honest, higher interest rates haven't really bitten yet. They're just starting to, but we can't afford to be left too far behind compared to the rest of the world here, right? So that's going to impact our currency, which is ultimately going to be inflationary if we don't, at least, when the Fed's going 0.75% and we're only going 0.25%, there's something wrong. So I think there's, the cash rate here goes higher still, and I reckon maybe in December they'll go back to 0.5%. But look, I think yesterday was just, it's a bit wrong for me to actually, I need to see a bit more data, but anyhow, that was what happened yesterday.
Yeah, the 7.3% number last week shocked him, I think. It shocked a lot of people, including me, and that's why I thought maybe he'd go 0.5%. All right, so at the end of the day, he's the guy who's being paid $1 million a year. He has to get it right. If he doesn't, after his 2024 call, he's going to be in a lot of hot water, I reckon.
Well, he's going to be in hot water. I don't think his term's going to get renewed. Pete, that's not a reflection on Dr. Phil. But
no, it's a tough job. He just has
what the market thinks and how the government's positioned. But look, anyhow, we are where we are. The market liked it. But we still need to see the same thing as the US. We need to see the data saying that inflation is actually has topped. Yep. And there's some promising signs there, Pete, but it's yet to... things like the recent floods and all those sort of things don't really help.
No,
and,
it all raises the cost of vegetables and stuff like that.
And again, the longer it goes on, the more people start to talk about higher inflation, that actually builds into sentiment and consumers start to expect higher inflation and companies are more comfortable raising prices. So that it sort of feeds on itself on a negative basis.
And the pressure is on Dr. Phil because at the moment, Jim Chalmers is charming Australia. They all think he's not a bad treasurer for a Labor guy. I heard him speak at the Business Sydney budget breakfast yesterday, and he copped a bit over the IR stuff, which is not really his responsibility, but they think it was a pretty good budget, so all the pressure's on Dr. Phil. Let's go to the Fed now, Paul. You think they will stick to their 0.75% rise that's expected, but it's the comments that are going to be critically important.
Yeah, I mean, the market, I think it's almost 100% chance of a 0.75% increase tonight. What the market's looking for and is hoping for is when they meet in December, which is on December the 13th and 14th, maybe it'll only be 0.5%. Yeah. So they're looking for some sort of comment tonight to suggest that the big, scary 0.75% interest rate increases this is the last one, and maybe the Fed will just be a bit more nuanced going forward. So that's what the market hopes. Now, he's not going to say we're going to go less next time. He's just in the tone of what he says.
They'll read between the lines.
They'll read between the lines. So that's what they're hoping for. If they don't get that tonight and he continues to take a really hawkish stance,
stocks will go down.
I think stocks will go down.
Yeah,
so
exactly.
It'll be the comments. It won't be the decision at 2:30 p.m. New York time. It'll be the comments after in terms of the press conference and the statement there that they'll be watching. And look, we'll all wake up that tomorrow morning to see exactly what the Fed's done.
Yeah, and we know that the market has been surprisingly positive. The Dow knocked up the best month since 1976 or something. But the important point is the market is anticipating exactly what Paul's saying, is that there'll be some suggestion that this aggressive interest rate policy is coming off the boil because inflation is actually coming off the boil. That's what we're going to be looking for overnight. Let's go to the last one, Paul. Goodman Group actually gave an update on how it's performing. We've liked this company. The market's been hitting it pretty hard.
Yeah, I think Goodman Group's a great company, Peter. It's been like all any company in real estate, they've done it pretty tough this year because of higher interest rates. I think you've got to separate Goodman Group because it's not a property trust. It's actually a property developer and property manager and funds manager.
Everywhere we go where we see Goodman outside of industrial estates, that's Goodman Group.
And it's international in its operation. It's more business offshore than in Australia. It's reaffirmed guidance today of EPS growth of 11%, which is not bad.
Yeah.
So look, a reasonably positive operational update. It's a lot cheaper today than it was 6 months ago.
Yeah.
This is a stock I think you put in your portfolio.
It's a long-term hold, isn't it?
Yeah, while interest rates are going up, that whole sector is going to be under pressure. So it's not going to be the first sector. You know, it's going to be harder work in that area. But I think this is a long-term hold, and you've got to take confidence out of the statement today.
And when rate rises either slow or stop, there will be a rotation to those sorts of companies that have been punished because they figure interest rates hurt them. And tech stocks are another example.
Yeah, and actually, interesting, the real estate sector did okay in October. It was the second best performing sector, which is a function of the market saying maybe we've taken it too much. Yeah. Interest rates, you know, maybe we're coming towards the end of the cycle of increases. And that rallied. So, and there was some value there in some of the trusts, but I still think it's, you know, we're still in the situation of interest rates heading up. That sector is going to be hard work. Yeah. But I think Goodman Group is a company to look at. It's one of the true growth companies in Australia. Yeah,
and also the bottom line is stock markets do look forward. If they're looking forward 6 months, by then I think interest rate rises will be over, at least for a while, until we see another big boom in growth, and maybe with lower inflation. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.